Meta. So this stock has had a tremendous past, let's call it 10 months or so, right? The stock fell all the way under $100. Should it ever have been under $100? No. Should it ever have been under $200? No. That was silly, okay? But they pushed it down there. Everybody ran out of this one as fast as they could. No, you back it up on a 5-year basis, and the stock's just done okay. Up 67%. And you look at what they've done over the past 5 years as far as their net income and their profitability, and their revenue, it's like night and day difference, right? Now, the interesting thing with Meta is a 4P on the stock's 23. This is why you got to look a little deeper than just, oh, the stock price has gone up a lot, it must be overvalued. No, it's actually significantly undervalued. 4P at 23. A stock that's as safe as Meta should be trading minimum 25, if not 30 PE. But it should actually be trading far exceeding that, because this company's growing EPS 20+%, and they're growing revenues double-digit percent. When you can grow revenues and EPS double-digit percentage, and you're growing EPS at even a faster clip than revenue, you're talking about you should be commanding a minimum 30-ish forward P, but probably closer to a 40 range on that one. And so when I look at a stock like Meta, significantly undervalued, despite the massive move it's made this year, it's still undervalued, very undervalued. It's just not as silly as of a deal as they gave us last year. But remember, last year was so unrealistic. Don't even compare things to last year, because remember, they sold Nvidia stock down to 110. That stock's nearly $500 now, right? They sold Meta under 100. Obviously, we know where that's at now. They sold Tesla all the way down to $101. Like, people just sold out of these stocks like insane. Netflix was at $170 last year. It's $400 and something today. Shopify fell to $25. Look where Shopify is today. Like, I could go through a million examples of just unrealistic, just insane discounts they threw on stocks last year. The bottom line is, what is it today? Are you getting it undervalued today? And Meta is a steal deal. We're up 135%, up over $300,000 on this one. By the way, Chipotle down about $1,100. Meta up $300,000 in regards to Meta. No, in regards to Meta, $734 billion market cap, but actually there's so much upside here that's going to happen over the next several years, in my opinion. Look at my base case for Meta. This is shocking, okay? This is my base case. This is my bullish case. This is not my ultra bullish case. I have them doing about $55 billion of net income in 2027 and about $224 billion of revenue in 2027, which would represent 14 and 14% top line, bottom line growth rates, okay? Now, in regards to this, that puts Meta in, by the way, they should easily command a 30 PE, kind of like Apple, Microsoft, companies like that traded at a 30 PE nowadays. Meta will eventually get there, where they'll just be able to consistently trade at a 30 P, forward P, like year in and year out, because people will respect Meta like that. It just takes a while to kind of get there, right? Their market cap should be around $1.7 billion in 2027, which means even after this, all the money I've made in Meta, this is small potatoes from what it will be long term. I believe we'll be sitting on a $700,000 plus gain in the year 2027, if not $800,000 plus gain on Meta stock overall. So nonetheless, folks, yeah, Meta's got a long runway of growth and a long runway of kind of the stock price going up. This is going to be a $600, $700 stock in future years, in my personal opinion, and it's going to be a whole lot of a fun ride, okay? My number 3 worst stock out there is Avant brand. So Avant, man, the stock prices got hammered. This one I don't feel like it deserves it, okay? My second worst stock, it deserves the hit it's gotten. This stock does not deserve what it's gotten, just to be quite frank. The problem with Avant, it's a super, super small market cap. It's the smallest market cap company I own. No one wants a piece of any of these super small market caps. Even if their balance sheet's in a good place, and even if their numbers are good and their business opportunity, no one wants a piece of these sorts of companies right now. It's just the way it's been, but this company doesn't deserve what they've gotten. Last quarterly results they just posted, revenue was up 100+% year over year, positive adjusted EBITDA, positive cash flow, 4th consecutive quarter of positive adjusted EBITDA and cash flow from operations. They're flirting with going full scale over to net income positive. If they can get there, that's another game changer for the company. So, man, down 42K in it, but this one just doesn't deserve it. Sometimes that happens in the stock market. And that's the risk with these super small cap stocks is, if you're in a risk-off market where no one wants to own anything smaller cap, like these stocks just floundered in. If you have 100% revenue growth and still no one cares. So it is what it is. I think eventually people will care about Avant, but it's not today. It's not today, right? And so I'm holding through. I've actually been buying some shares recently, and we'll see where it goes from here, okay? Now let's talk about like how investors should approach this market, in my opinion, kind of like how I'm approaching this market and how I think about this market in kind of everything we're dealing with here, right? So the way I think about it is if you got a smaller amount of money, it makes sense to not even worry about this stuff and just buy and buy and buy if you're dealing with smaller amounts of money. Now, if you're talking about a little larger amounts of money, I think it's very important to have some cash levels around, 10 to 30% cash in this market. I think this is not a stock market you want to be cashless. Let's call it that. I think if you want to go cashless last year in that crash scenario where the best stocks in the world, where Nvidia was trading at $110 and Meta was trading under $100 and Tesla was trading at $100 and AMD was at $55, I think if you wanted to go cashless last year and just deploy every dollar you possibly could in the market, I think that was fair game. But I don't think this is really the market right now that you want to be cashless. I think this is a sort of market you want to have 10 to 30% cash around, especially if you have bigger amounts of money, because there's a lot of different scenarios that can play out here. If you are going, if you have no cash right now, then you're basically preying on a no landing, a soft landing, okay? And I don't think it's necessarily a great idea to hope that these guys pull off something that they might not be able to pull off, okay? And so that's why it makes sense to be net long, like I am in the market, but have some dang cash amount. If you're a more sophisticated investor and you have a lot more experience in the market, then you can consider some hedges for next year as well, which is, you know, certainly a pretty good idea if you're somebody that's more sophisticated. If you're in your first, few years of investing, does it make that much sense to hedge? Probably not, because you're not at that level yet. If you've been in the market 10, 15, 20 years, it's a whole different ballgame. You know what you're doing. You know how to set up some hedges, some proper hedges for your portfolio, just in case we get that hard landing in 24 or something like that happens. Hey, you're prepared for it, and you're going to make a whole lot of money on the downside in that scenario. But at the end of the day, if you got larger amounts of money, you need to be having cash around. I'm telling you, have a little bit around. And especially right now. In the past, if you had cash around, right, let's call it the previous 15, 20 years, you might look at it and say, well, dang, I got cash in a savings account, it's not earning me anything. Right now, you get 4 or 5% on that cash for sitting over there right now. So we're in such an opportune time to have a little cash around, right? I'm still buying stocks every week. There's a lot of deals out there. I'm going to continue to take advantage of deals, but I'm also cashing every single week, right? This is the right approach in this market, in my personal opinion, that we're going into. Have some cash over here. If you're sophisticated, have a little hedges and be long the market and take advantage of deals in the market. It's a kind of a threefold strategy there. And I think that's the best approach in this market, man. It's the best approach. Certain markets, it's like just buy, 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 buy. Don't worry about cash. Don't worry about anything. It's just you need to be taking advantage of every deal in sight, okay? This market, take advantage of deals. Also take advantage of that 4 to 5% you can get in a savings account right now, okay? Cash up a little bit, okay?